Welcome to the deep dive. Today we're really getting into a fundamental trading concept.
Yeah.
Basically, working with the market, not against it.
Yeah, the old saying, never swim against the current, it really holds true here.
Exactly. And we've got some fascinating material, a trader's personal reflections, sort of their journey navigating different market conditions. So our goal here is to unpack that, pull out some solid insights on adapting strategies and, crucially, how to avoid forcing trades when things just aren't lining up.
Definitely. And this trader's path is, well, it's a great illustration. They started, like many do, with currency trading.
Right, the Forex market.
Yeah. But the interesting part is how they didn't just stay there. As they saw some ROI, some positive results, they branched out.
Okay, so where did they go from currencies?
They moved into potentially higher risk, but also higher reward areas. Think commodities, gold, silver, oil, even those exotic pairs like USDZR. And index trading too, NASDAQ, S&P 500.
So a calculated expansion then,
Yeah.
not just jumping in feet first everywhere.
Precisely. It seems tied to building confidence and capital first. They established a base, then looked for, wider spreads and potentially bigger returns.
But the key wasn't just which assets, but when.
Right.
Adapting.
Absolutely. That's the core message. When market conditions changed for one asset class, they didn't just stubbornly keep trying to make it work.
They used that swimming upstream analogy, didn't they?
They did, trying to force trades when the environment's hostile.
Yeah.
It just doesn't work. It's draining.
Makes perfect sense. So when that current shifted away from, say, their initial focus, what was the next adaptation?
Well, the reflection mentions moving into cryptocurrency and synthetic indices. Again, following where the perceived opportunity was at that time.
Okay, another shift. And is that where they are now?
More recently, it sounds like a move towards futures and options, even buying company shares directly. So it's this ongoing process of evaluation and adjustment.
It really underscores being flexible, They explicitly talked about not forcing trades if the risk-reward ratio wasn't favorable.
Yeah, picking your battles. It's like that other comparison they made.
Oh, the forced relationships one.
Exactly. It's suggesting that trying to make a bad trade work is as doomed as trying to force a relationship that just isn't right. The outcome is usually negative.
And they also mentioned something a bit more philosophical, these spiritual ties or soul ties to trades. What do you make of that?
Yeah. It could mean a few things. Maybe a really deep belief in a specific setup, or perhaps that intuitive feel you get for a market after years of experience. It points to how personal and psychological trading can become.
Which makes sense when you see the list of negatives they link to forced trades. It's quite stark.
It really is. Things like trauma, emotional attachment, getting in the way, losing focus.
Constantly watching the screen, physical exhaustion, anxiety, even chest pains.
Yeah, it's a heavy toll. It's not just about the money. It affects your whole well-being. Physical and emotional exhaustion, psychological fracture, wasted time. It's a long list.
And then there's that anime ARCS analogy they use. How does that fit in?
Right, like viewing the trading journey as a series of story arcs or phases. In each phase, you either learn, adapt, grow stronger, or you fail. You get hit by the trading flame arrows, as they put it.
So evolve or face the consequences, essentially. It's a powerful image.
It is. It frames trading as this continuous process of leveling up your skills and mindset.
And the whole reflection ends with just one word. FUGA. Left kind of open, isn't it?
Completely. Maybe it signifies a final state or perhaps just the end of that particular reflection. It kind of invites you, the listener, to place it within the context of everything else discussed, the adaptation, the risks, the journey.
Yeah, it leaves you thinking. So wrapping up, the core message seems to be adaptability is paramount. You have to avoid forcing trades and recognize the real costs, mental, physical, financial season of fighting the market's flow.
Couldn't have said it better. It's about recognizing the prevailing conditions.
Which brings us to a final thought for everyone listening. Thinking about those anime ARCS, what arc are you in right now? Not just in trading, but maybe in learning something new or any project you're undertaking.
Yeah. Are you adapting to the current you're facing in that endeavor? Or are you maybe pushing against it unnecessarily? Something to consider. Aligning your effort often leads to, well, much better outcomes.